Comments made on the following paid commercial program are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time.
Welcome to the Money and Wealth Show. On the program this week, tax tips with David Ingram, money commercials, and our special guest with a look at 2010 from a fourth quarter perspective is Victor Adair. Welcome to the Money and Wealth Show. I'm Sterling Fox, and it's a pleasure to welcome back to the program financial commentator and former portfolio manager, Victor Adair. Hi.
Hi, how are you?
I'm well, thanks. Good of you to join us again, Victor. It's always a treat to have you on board.
Okay.
Here we are in the fourth quarter of 2010. It has been, to say the very least, an unusual year. How are we looking in this final quarter as we head to the next round in 2011? How are we doing?
Well, there's been a lot of market volatility, and I think there's been a lot of change in terms of people's perception as to what might lie ahead. You know, if we put a little time frame on it, we go back into, say, maybe 4 or 5 years ago when the boom times were going, and people were taking on more and more debt, asset prices were rising around the world, and the appetite for risk was huge. Then we hit the wall in 2008, and particularly into the fall of 2008, things got pretty ugly, right through to the spring of 2009, and then things started to get somewhat better. We got better as a result, I think, of, say, emergency action that was taken by the authorities around the world. That's the governments and the central banks. We got interest rates down to the lowest level we've ever seen in our lifetime.
Yes.
Massive government stimulus and huge deficits taken on to do that. There could have been any question as to whether it was the right thing to do or not, but I think in hindsight, thank God they did that. Maybe that got us through the worst patch. Maybe there will be complications as we go forward from what they did then, certainly, but let's say the world is maybe a calmer place now economically than it was in the fall of 08 and the spring of 09. Yeah, we got a lot of problems ahead of us, and some of them are daunting, difficult to solve, and there's going to be some real divergence of opinion as to what to do. But we kind of got through that real black hole period, and now we're maybe limping along, and compared to what it could have been, maybe limping along is not too bad.
Why is it then that so many people, particularly here at home in Canada, Victor, are saying quite loudly that the stimulus program in Canada really didn't amount to much?
Well, maybe it didn't. In terms of the amount that was spent relative to what was spent in other countries. Maybe it's just a case of things don't feel that bad here. You know, here certainly in British Columbia, it feels like what recession? You know, I was just recently in California and they're reeling from it back there. One person said to me, well, I get up at 3:30 in the morning to come down to this little job I've got, but at least I got a job.
Right.
You don't hear talk like that in Canada. So maybe it was like things never really got that scary or that bad here, or maybe, I don't know what other option, realistically.
Okay, but if the stopgap stimulus measures taken around the world got us through that rough patch, as you describe it, then here we are. So is it reasonable that if things get rough again, governments are going to have to dig deep and borrow even more money to keep the artificial stimulus flowing into the marketplace?
Well, if we go back as recently as August of this year, the summer of 2010, the talk, and by the way, Canada is largely a spectator sitting up in the cheap seats watching what the big boys are doing, and that may be a little tough on our ego, but that's the way it is in the world.
Right.
Okay. In August of this year, the talk was of a double dip recession.
Yes.
And at the same time, it was like the government authorities were pretty much tapped out in terms of what they could do with fiscal policy, and part of that being tapped out was, say, the rise of the Tea Party types who were saying, you're crazy, you know, we're pouring our kids' future down the drain while we're getting the fat cats on Wall Street even fatter and happier. We're doing the wrong thing.
Right.
Okay, so let's say the appetite in the States for further fiscal stimulus has been reduced at a same time when it looked like all the spending that had happened so far had really just kind of kept us with our nose above water.
Right.
Now we're going into the next phase, which is going to be some substantial, possibly substantial efforts from the central bank to stimulate the economy, because the government is going to have their hands tied going forward relative to what they could have done before. Simply
Because of the degree of debt they're carrying, plus the stimulus debt they've added on in this year.
That, and I think just the political backlash against going hugely into debt. You know, Sterling, one of the expressions that I have, and I've got it scotch taped to one of my screens in my trading room, is that way more promises have been made than are ever going to get kept. And part and parcel of what I mean about that is we've got the deficits that are current, but we're looking at the unfunded deficits down the road. And we've all heard about this, but it's real, and it's a real problem. Pension obligations, promises that have been made, in other words, and where the hell are they going to get the money to pay that? So that's going to be part of the problems that we're going to need to work through as we go forward. We got through a very scary period of time, in the fall of 08 to spring of 09. Got through that. We're limping along. Things could be a lot worse, but we've got a lot of problems to deal with yet.
And as far as those funding for those programs like pensions and so on, in Canada, are we in somewhat better shape in terms of a pool of money for which the boomers are expecting, or from which we're expecting to receive our little share that we've been paying into since we were teenagers? Are we in better shape than some other places?
Yes, short answer. No, we're going to have our own share of problems. We have in Canada, the public is deeper in debt than they've ever been, both on an absolute basis and on a percentage of GDP basis. That has got, it's worrying the governor of the Bank of Canada, and perhaps the rest of the people on staff at the Bank of Canada as well. So yeah, we're in better shape with our pensions, but we've got our problems. Everybody around the world is going to have problems. Certainly in the European theater, you've got a number of countries all trying to operate with the same currency and the same monetary policy, and clearly that's caused some problems. We've got the pigs, as they call them,
right.
that are having to pay much higher interest rates to borrow money than the others. And there is, I think, a fair question as to whether or not some of them will be able to meet the promises they've made. Whether or not they'll be able to keep those promises, not only paying back money they borrowed, but to deliver services to their people.
So if the government of Canada is a little concerned about being able to fulfill the promises it's made, governments in many other countries around the planet are in much worse shape in terms of ability to pay.
I think that's true, and I think the bank is also very aware, or is of the opinion, that Canada is vulnerable to problems that happen outside of Canada,
of course,
that we've got no bearing upon. Certainly where we stand now, if there was to be a turn back into a slower global growth and a lessening of demand for commodities, Canada would be very vulnerable in a situation like that, and it would be not of our making at all.
Our guest this week on the Money and Wealth Show is broadcaster and financial commentator Victor Adair. Lots more ahead. Please stay with us.
Hi, I'm Larry Ray, President and CEO of American Manganese, Inc. Our project in Arizona is electrolytic manganese. We have a resource of 11 billion pounds, currently trading at $1.40 a pound. Our cost, 44 cents. For more information, go to our site at americanmanganeseinc.com or phone me direct at 604-531-9639.